Hi, I'm Wei Tan. I'm a Manhattan, New York property agent focusing on investors who are buying Manhattan condos for asset diversification. This is about Manhattan property investment performance. I used to be a finance guy, so I understand that investment performance is very important because it's a way of comparing returns and appreciation and all that versus other asset classes. So we're going to talk about that. The first slide here are just some examples of our deals. The one on the left here was booked at pre-construction. We waited 2 years and then it was rented out right away. It's by the UN area, and notice the casement windows and the dual exposures. So these are wow factors that are very important in attracting tenants. The one in the middle here is very close to the World Trade Center. It's a pre-war condo. There's actually very few pre-war condos because condos were only built after the war of 1945, and condos only started getting built in the 1960s onwards. So a pre-war condo is rare and unique in that it has high ceilings and it has thicker walls, so there's more privacy and there's less noise coming from the neighbors. Anyway, my client got this and then sold it a few years later for a good profit. And the one on the right here was also booked at pre-construction. It's in Gramercy, and we rented it out right away after it's done. The finishings are very nice here. The pictures may not really show, but there's a lot of detail in the quality of the finishings for this apartment. Let's move on to the next slide. Manhattan property investment performance. Let's talk about the property downturns. From 1999 until now, there were 2 property downturns. During the Great Financial Crisis of 2009, which lasted from 2009 to 2010, and then from 2017 until 2019. So those are the 2 downturns, and the 2019 downturn was prolonged by 2020, which was when COVID hit. So right now we are in the beginning stages of the upturn. The market is recovering, and we'll see from a next slide. Coronavirus 2020. So what happened was that in the beginning of 2020 we thought that the market was recovering from the downturn of 17 to 19, but then COVID hit, and then the market was shut down for 3 months from March until June. And when it reopened, that was the bottom from June until around August. The bottom, I would say, would be from May until July. And during the lockdown, I had represented investor clients in negotiating deals during the lockdown. So that was the period of the highest uncertainty, but that was also when the best deals were had. Manhattan recovers in 2021. This year has been a great recovery year because of very low interest rates, the pent-up demand from last year, and also optimism from the reopening of the New York economy. This is the pending sales graph, and this refers to the contracts in pipeline waiting to close. Notice that the bottom was in July, and then the contracts in pipeline have been increasing every week. These are weekly numbers. They have been increasing every week until now, and they haven't dipped at all. So it just shows how strong the market is because all the buyers are coming back. This is the market pulse, which shows when it's a buyer's market down here, when it's a neutral market, and when it's a seller's market. Let me move the photo to here. Okay, this is the market pulse graph by Urban Dix. Notice that the boom years are seller's markets, this section. And when it's here, it's a buyer's market. So notice that roughly from 2017, late 2017 until 2019, it was a buyer's market. And then COVID hit, it became a great buyer's market. Remember I mentioned July. So July here was the bottom, but starting around February or March, it became a seller's market. So from the metrics here, you can see the market pulse has been increasing, and right now it's at 0.8, but basically that means it's a seller's market. This is the historical price trend of Manhattan condos. Let me move this here. The trend is that it appreciates steadily unless there's a recession. It goes up for 6 or 7 years, it comes down for about 2, then it goes back up again for 6 or 7 years, it comes down for 2, and that is the trend. So it goes up. This was the 2 peaks before, and this was the great financial crisis when it came down. Then it came back up again. So the prior peak was in 2017 here, and then it weakened because of changes in tax law and the trade wars and so forth. And then this 2020 and Q1 of 2021, this was when COVID hit. And 2020, it was only 9 months of transactions because 3 months were closed, and Q1 of 2021, these reflect a lot of the pandemic deals that were signed in, let's say, October, November, and December of 2020. And then in 2021 second quarter, which is this final bar here, it shows an increase. So right now the price per square foot of a Manhattan condo is $19.21 as of Q2 of 2021. So what was the price per square foot back then in 1999? It was $480. So it goes up with time, and this is how real estate is, provided there is limited supply. So Manhattan property is for stability, it's not for yield. The yield is very low, it's around 2% for a net rental yield, but global investors buy Manhattan for the price stability. Manhattan property appreciates with inflation. So why do property prices go up? It's the same reason, whether it's here, whether it's in London or Paris or anywhere else, property prices go up because it's part of inflation. In the US, housing cost is about 40% of the CPI index, which is the inflation index. So as long as there's inflation, property prices would go up because it's a hard asset. Construction is going to cost more over time, salaries cost more over time, and so forth, and property prices go up over time, rents go up over time, the cost of a burger goes up over time, cost of noodles go up over time. The key is getting the right property, and this is where a buyer's agent comes in, and a buyer's agent would be able to help you identify out of the 5,000 properties out there, which are the 5 that are good. And the way we do it with clients is that I would select the 5, for example, and explain these are the upsides and these are the downsides, and that is our process. But basically, you need to have a buyer's agent to represent your best interest as a buyer, who's going to objectively let you know what are the upsides and the downsides. Because if the buyer just goes online and just reaches out to the seller's agents, whose photos are the ones on the listings online, then those are seller's agents whose interest is in representing the seller get the highest price, right? So real estate agents are like lawyers. There's one representing the buyer and there's one representing the seller. And this is a brief bio of myself. I focus on Manhattan condos. I'm an ex-City banker, manage a sizable business. I was at Citibank for about 10 years, went to business school at Illinois. I live in Tribeca with my family, and I do a lot of fitness stuff. And thank you for watching.